Hello and good morning, folks. Welcome back to Almus Market Mornings with your host Shikhar Garg. We have had quite an interesting aftermarket session as indices were seen having a thriving life again. Commodities snapped out of their up moves and currencies corrected. At some point, it even started to look like the whole geopolitical tensions are done with. But are we actually done with? Like for more and for further details on this geopolitical tensions and your financial updates of this morning, we have today Mr. Pankaj. Pankaj, who will be telling us whether it is actually over or it isn't, what's there in store for us in geopolitics. Also, there's one more thing happening today. We have ECB. So, anything if we have to expect of out of ECB, Pankaj, please tell us.
Hey, thank you. First, we'll begin with the Indian election scenario. And India's 5 state government elections result will be announced today. It seems that UP will be grabbed by BJP. Punjab is likely to be grabbed by AAP. Both BJP and Congress are working very closely in Goa, Uttarakhand, and Manipur. It always being said, whoever win India heartland, Hindi heartland, they will be winning the central election. So it looks like 2024 is also being set. Let's coming back to the markets. Oh, we saw Brent crude oil fell 20% in one trading session. The quoted regions can be Ukraine PM saying that they are not pursuing NATO membership. That being said on Sunday, but market interpreting much later. And also open for a compromise on the status of two breakaway pro-Russian territories that Putin has recognized as independent statement. From one of the Russian side said it would be better if their goals in Ukraine were achieved through talks. The other side, United Arab Emirates said that OPEC members would support increasing output into a market which is in a disarray because of supply disruption caused by sanctions imposed on Russia over its conflict with Ukraine. The third region can be Ukraine calling for a ceasefire to repair nuclear plant. Markets reacted, risk assets responded very strongly. Eurozone, which has taken the biggest hit after the Russian attack, saw its stocks rally as much as 6% during the day, while the single currency gained almost 2%, bringing the dollar index down with it. All the safe havens were lower, with gold losing more than 5% from the top. US 2-year yield back at the highs. German yields well into the positive territory again. Demand for euro is seen from investors as Europe plans to raise massive amount of money to fund investment in defense and non-conventional energy. Investors also sold dollars against the high-yielding emerging market currency as a risk sentiment improved. All these moves are currently seen as a correction to the phenomenal moves we had seen in the past few weeks. And it might be too early to say that it has reversal because all markets were looking either overbought or oversold. We are looking into two important economic events today. European Central Bank meets for a rate decision, and investors will look to see how they approach the same with inflation at multi-decade highs and possible impact on growth from the Ukraine war. It appears that members are cautious of jumping the gun to tighten the policy amid uncertainties and may wait to assess the inflation trend for some more time. The other important data point is the US CPI for February, which is expected to show annual consumer price growth closer to 8%, which could be very devastating for US economy. All of us believe that it is short term. Inflationary pressures are expected to increase on the energy side, while price pressures on core goods categories are seen to have moderated somewhat. CPI will be important data for Fed to be before it meets next week on Tuesday, Wednesday for the policy decision. On an average, on a balance, we expect 25 basis increase in rates. Now coming back to India, rupee reaction to the fall in crude oil prices in global markets have been very positive, with USD trading below the support at the 76.20 in offshore trade. Now currently trading is at around 76.35. It has also reacted to the down move in the dollar index, even as exporter rushed to cover yesterday. Being a year-end, selling pressure may sustain that can push the USD INR closer to near-term support of 75.70, 80 or 76.20 area. Let's see how it goes from here.
Okay, I think the geopolitics overshadowed so much that we almost missed out on the local or the domestic elections coming in. 5 states are coming up with their results. All right, on that front, There's one more thing, guys. We'd like to highlight: the war is not yet over. The geopolitical tensions is not yet over, for that matter, if we have to correct. And it looks like a breather. But before we say goodbye today, I'd like to put forth a thought which was initially argued by Norman Angell in 1910, that war was more or less obsolete because of these economic interdependence. But as we see, war was very much within action today, and economic actions were taken to pacify or fight this war. So basically, the networks and the economic tools have now become another method of fighting, as against the only traditional methods of guns and bombs. So let's see how these networks and changing world order plays around with the geopolitical tensions coming in. Till then, hope things continue to pacify, and we close today's session. Goodbye, and we catch up again tomorrow. That's it.